Hi, this is Simon with Trade and Perform Coaching, doing the trade review for today, August 19th, 2013, for ES primarily, and we'll touch on NQ a little bit as well. So, we had a couple things going on when we came into the morning, and I want to talk about a little bit how I set up the day. In the morning, I tweeted that we had had tight overnight ranges in both ES and NQ. When you have a tight overnight range like we do here, which basically we were at 1650 to 1654. Let's call it a 4.5 point range. When you have a tight compact range like that, generally the rule of thumb is when it breaks that range, you can have a range extension. Even if that range extension fails later in the day, you can have a range extension, and fading it right away isn't always the best idea. The next idea we came in with, NQ has been stronger than ES every morning, and I'm referring to Thursday morning and Friday morning specifically. Okay, NQ has led the rotation up. So I cautioned on mentioning that. My idea in my head was I'm going to be cautious on shorting NQ. It's been the stronger of the two, and I'm going to look to get long either one of them if I can get them to come down into the gap fill or pre-market support, with the idea being that we're going to do some type of attempt to fill this gap that's all the way up there at 1682. So we came in, and sure enough, so NQ took off out of the gate and broke its overnight high within the first 10 minutes of the day. ES, on the other hand, being weaker, gave us a great opportunity by coming into this gap fill and pre-market support. And this was just simply, whether you took it from the middle of the zone or the front of the zone, was a beautiful trade setup, and you had anywhere from 7 to 8 points, depending on where you took it, had you left a trailer. And 2 points was definitely in the bag without almost any effort whatsoever. It was easy. Okay, so once I've garnered that 2 points, whether I've left a trailer or I haven't left a trailer, however I've decided to manage it, the key is I'm only looking at my day as a whole in breakdowns of 1 to 2 trades a day. That's all I need to build my trading account. I go through specific steps with my clients on how to increase trade size in a reasonable and prudent fashion by keeping close track of the number of trades you've had successfully in a row, and by not only saying, hey, this is a high odds trade, but showing them how they can demonstrate to themselves that they are actually taking high odds trades, and that they don't have to reference me for that fact. They can go back and reference their spreadsheets and building their own data set to confirm that observation. Yes, I'm making the original observation, but by the end, it's their observation and it's their data that's confirming this information. And once you have that information set in front of you, you can highlight which trades of yours are the best trades and that they are truly high odds. And once you know they are truly high odds trades, then you can increase your trade size. That being said, I highlight the trades I get wrong. I'm going to highlight one of the trades, the trades that I get right. I'm going to highlight one of the trades I get wrong. You know, I'm a bit dyslexic, and when I get tired, I flip these things upside down and inside out. So take it as a sad comedy at best. But I'm going to try and keep the line straight for y'all. So this is, okay, my rules generally say when you get to a zone, the middle to back of the zone is the highest odds trade location for a 2 point rotation higher. And you got that right here, as I was painfully reminded of by almost every one of my clients today. I did not take this trade because NQ was trading so strongly. Look at all these just straight up green bars that we had here. We got up over Friday's high, up over the zone, and we extended all the way up to 3100, and I just wasn't ES really hadn't extended that much. I did want a short ES, but I really figured we were going to get an extension up into initial resistance, up into initial resistance right here, and it just never came. Extremely disappointing. At any rate, I did not take the short. I sat there, twiddled my thumbs, didn't do anything. As a matter of fact, I didn't do anything until right over here. I'm going to put one of my beautiful little down arrows right here. At this point, let's see. Right here. Okay, that was the cleanest setup I had. The issue I had with this zone right here is it's already been tested to the downside, so I didn't want to take a long here, right? first time into the zone is my focus. The only time I make an exception with that is if it barely penetrates, like it'll just touch the top of the zone, like we did right here. Okay, so we just barely touch the top of the zone here, and then we ricochet off. But when we come all the way down into the zone like this, I have to lean toward that zone's been tested. And the reason why I do that is so I don't get trapped when we have moves like this, where it looks like it's the first move, but really it's the second move, comes back up to the top of the zone, and then fails. By the same token, I don't assume a zone's going to fail. Does it make for boring trading? Yes. Everyone would like to anticipate and guess and see where the trade's going to go. But remember, I've already missed the trade up here, right? And if you remember on Friday, we had a move down near the end of the day, and the first move down to new lows trapped traders, and they pushed it up 8 points. I'm going to, let me try to compact this and see if I can find this really quickly and easily here. Here we go. Okay. Here we had the, let's see, this was end of day, and we came down, let's see where we had the beginning of the day. Let's pull this up just a drop. There we go. So here is 8 a.m. We had a break of the low. They came back down. They broke the low again. See this right here? And look at this trap. We came in. They trapped on a new break of the low, shoved them all the way up. Then we came back down, and we had another break of the low right here. See that? And on this time, the first time they only squeezed you for a couple of points. It was roughly 1650 up to 1653.5, right? But the second time when they broke the new low and everyone was sure they were going to flush, they ran them hard all the way up to 1658 almost, 1657 and change. So when I'm all the way back over here, right, I'm a new afternoon, here's the low, here's the new low. Look, they replayed that exact same game. New low, squeezed up. This time it was from approximately 1647 and 3/4 up to 1650 again for 3 points roughly, right? Next time down, they came in, they tried to catch them on the same way. This time it broke down. But look how much cleaner this trade is. When it breaks down, it comes right back up to the resistance point. Instead of chasing down, you've let it get some extension to the downside and then let the market come back to you. Again, no guarantee this is the last hour of the day. They could have easily just brought it up here to Friday's close again. I've seen it happen many times, but they didn't on this particular day. It turned out to be a very nice trade to scale 2 points and leave a small trailer right into the close of the day, which closed the cash market closed near the lows, and as you can see, they've been kind of trailing it up into the Asian session. Again, the other thing to notice is after hours in Asia and in Europe, look how beautifully these zones hold. This is a move right here, right back into 1648, right back down to 1645.50. So now we've gotten the painful blow by blow. Oh, there was one more thing. When I was looking in here on this new low, I was looking for a tick divergence, and I didn't get it, which is why I was wanting to look for a reason to take a long, and I could not get tick divergence in there. Didn't get tick divergence in through any of this, and that is why I did not call out a long through any of this here. So sometimes your day is boring. I had 2 trades today, and I was actually willing to walk home with 1. So now that I've obviously shown you all the chart that works so effectively, so there's a general question about whether you can make money day trading. And I got into a disagreement, argument, whatever you want to call it, with a gentleman today called, let's see, Leopard Trader. Leopardtrader. And, you know, he was just, man, I don't know what was up with this guy. I certainly went in the direction of trying to engage him on whether day trading was profitable or not. And, you know, he responded with, haha, that's great to see someone actually predict daily moves on a daily basis. That must be in the Guinness book, laugh out loud. And then he went on to say that odds of being precise is very low, less than 2%. So, you know, the only reason I'm in this was to see if I could help some traders turn from losing traders or boom bust traders, which the majority of us out there are as traders, to consistent winning traders. And so one thing I don't claim, I'm not very good at calling the entire move the entire day or saying we're starting at point B and ending at point D. I'm good at getting small pieces in between, and occasionally I get lucky and get some really nice swings. And I'm pretty good at finding areas where we'll have big inflection points. Those are my strong suits. My weak suits are slow markets. I have a hard time letting the trade take all day to run, and I get impatient with those trades, and I have to trail them up and just let the market take me out of them. And I don't like slow markets. I have a harder time reading them when the actual price action itself is slow. So that being said, I've been in this business for well over a decade and a half now. God, I sound old. A decade and a half, and out of that decade and a half, I ran a hedge fund for the better part of 10 years. And what I saw was very few traders making a ton of money and the majority of traders losing money. And the difference between the traders that were making money and the ones that were losing money were two things. First of all, the traders that were making money had a written mission statement and a written trading plan. And number two, they had the ability to follow that trading plan, and number three, they controlled their down days. Okay, those were the three keys. Now, all of us came to our zones in different ways. That I use volume profile or market profile isn't anything special. It's just a form of conveying information. But what we were good at seeing is combining kind of the larger picture of what's going on with a very small picture. And then the other thing that we figured out that was key, and I'm talking specifically to day traders, is we were able to find very small areas of opportunity, understand that we could nail those areas, and increase our trading size so that we didn't have to call a 10-point or 20-point move accurately, but that we could call a 2-point or 3-point move accurately and really nail the crap out of it. And then occasionally we would get just huge home runs where you could just see the trade setting up and nail it. Now, does that mean I caught every trade that was a home run? No. But it does mean occasionally I tripped into a home run trade. And those are trades that can double an account or increase an account by 50% in one single trade in one single day. Okay? Do they happen often? No. Usually it's the bump and the grind and the take it step by step and work it out. But what I wanted to, anyone who's listening to this, what I wanted to convey with really all my heart, because it's what I'm passionate about, is that you can make money as a day trader if you have a true edge, B, the ability to execute that edge, and a plan to control losses when things are going wrong, and the discipline to keep those losses small. Okay? And so gaining an edge is difficult. I try to help people with that, but obviously you have to do the work so that you can trust it and know that it works. Just blindly following someone usually doesn't do the trick psychologically. You'll have a ton of fear you're having to deal with. Number two, can you leverage? Yes, I believe leverage works, but only if you leverage it in such a way that you're leveraging up while your profits are increasing and you're quick to cut your losses and or deleverage if you go through a period of time where you're not making money. And I think I've demonstrated in this blog on days where I have, for example, if I have 2 stops back to back, my day is over. I do not F with it. I'm finished. Why? Because I know I can usually come back the very next day and get 2 trades in a row that are winners. But my losers are larger than my winners usually by a point, unless I start factoring in my trailers, which I don't factor in in that concept. I just simply assume my losers are about 3 points, my winners are usually about 2 points. And that keeps me above water. And if you can avoid destroying your account on those down days, and if you can keep your head straight and you actually have an edge, you can make money day trading. So I know I've beaten that like a dead horse. I apologize. I certainly hope that helps somebody. I'm really tired. I've been going since about 5 this morning. I have no idea what's going to happen overnight. I know that I'm going to look to the zones to give me guidance. And I am totally prepared for this market to reverse at any point. I'm just quite sure, just as people overpiled in and got overconfident on the long side, they'll get overconfident on the short side, and we'll have some great squeezes. If you have any questions, comments, you can tell me I suck. You can tell me the reviews are great. I don't care. Some feedback would be great. You can do so at tradeandperform@gmail.com. Shoot me a line over Twitter or StockTwits. I hope everyone did well, banked today, and I look forward to doing this all over again tomorrow morning. I'm going to go catch some Z's. Y'all have a great night.